So watching Tesla closely, I saw an up arrow today. Another boost there?
Exactly, and actually this name as opposed to Target seeing some continued weakness. Tesla right now pacing for a 7-day winning streak. Shares are now up about 78% year to date, but Citi did raise its price target to $215 a share from $175 with a neutral rating following the firm's 2023 U.S. vehicle density survey. The survey, they said, which they used to gain an edge on the single most important forecasting metric in autos. They think this points to a surprisingly strong density outlook for Tesla. The firm's
2023 started with high hopes, and there were several speculations about how the year would run. Looking back, we recall that from the price cuts earlier this year to Tesla sharing impressive Q1 earnings, to the shareholders meeting, and even to the Model Y winning the spot as the best-selling car in the world, nothing has so far pushed the stock significantly, as we would have expected. Look at it this way. Tesla is an incredible car company, quite all right, and its stock value is expected to respond to growing earnings and profit margins. I mean, Tesla makes the highest profit on each car that it sells. No one even comes close. So what could actually be happening? Obviously, Tesla investors are tired of waiting for the light at the end of the tunnel, and it seems to be staying dark for way too long at this point. Is there still any hope for the stock? Will Tesla rise above the market dynamics that holds down its stock? In this video, we recount the comments of Gary Black, one of the biggest names in the investing sphere, and expert investment analyst Alexandra Merz, as they recently shared their thoughts on why Tesla stock is still undervalued. So friends, if you have the need for a renewed hope in Tesla, then be sure to not miss a second of this video as we walk through finding the answers together.
Yes, it is. Yes. So punchline, it's our expectation is that we're still looking at a hard landing recession. And I think it is still coming. The real wrinkle this time is to a degree some consumer spending on services and jobs in general, right? They're positive. And I'll remind everyone that nobody ever realizes we're in recession when it's starting. I think it was July of 2008, 3 quarters inside of the Great Recession before there was a negative GDP print, right? So that's the reality.
Tesla's stock has been burdened by several macroeconomic factors that continue to weigh heavily on the car company as well as several other businesses. Tesla's CEO Elon Musk has warned at the company's annual shareholder meeting in Austin, Texas, that the electric vehicle maker is not immune to the global economic environment, which he said would be difficult for the next 12 months. In the past years, supply shortages, logistics bottlenecks, and rising costs were the major problems for the automaker, and now Tesla seems to be facing fresh market challenges. Hello everyone, and welcome back to Tesla Tomorrow. The Federal Reserve recently approved its 10th interest rate increase in just a little over a year and dropped a hint that the current tightening cycle is at an end. In a unanimous decision widely expected by markets, the central bank's Federal Open Market Committee raised its benchmark borrowing rate by 0.25 percentage points. The increase takes the Fed funds rate to a target range of 5% to 5.25%, the highest since August 2007. The Fed has constantly cited inflation as the reason for its continuous interest rate hikes. According to the firm, it will take necessary measures to curb the effects of inflation and recession. However, Gary Black has said that contrary to Fed's belief, there is no recession. He said, what is happening right now is that people at the low end of the economy, the lower income people, are hurting because inflation has been too high and they do not have a lot of money. The expert further defined actual recession as when GDP is falling for at least 6 months, adding that what is being experienced now doesn't qualify as a recession. Could Gary Black be right? Will Tesla's macroeconomic challenges continue to tie down the stock? We will have more details in this video. But before we start, if you like this type of content, make sure to hit that like button, subscribe to our channel, and turn on notifications to stay up to date on everything happening with Tesla. The Future Fund Managing Partner said that most people, including himself, believe that if there is a recession, it's going to be extremely shallow because the Fed can cut rates any time. And so he's of the opinion that people are not buying into the idea that there's going to be a recession. Tesla has managed to pull through these hurdles nonetheless, and its future advertising plan could also suffice, especially in regards to market challenges. Gary Black stated that Tesla will venture into advertising, either by preaching the benefits of using electric vehicles or the benefit of buying a Tesla as opposed to other EV brands. This is not just a prediction by Gary Black, as Tesla's big fan Alexandra Merz also supports this, and that's where it gets interesting. Merz is a big fan of Tesla. The Tesla bull and influencer has said that there could eventually be a time when Tesla cars no longer compete with only EVs, but also with gasoline-powered vehicles, as buying a Tesla will be a far better choice judging by its price and features. Sales of ICE vehicles are already dropping, and it is expected that in the near future, most of the cars on roads will be electric. According to the International Energy Agency, EVs will represent more than 60% of vehicles sold globally by 2030. Considering Tesla's pricing power, which is a huge market advantage, as well as other incredible products that are soon to hit the market, Alexandra Merz believes that Tesla shares could be worth around $300, citing an obvious difference between value and price. The Tesla bull also recently sent a request to the New York-based credit ratings corporation, Moody's, about considering Tesla for a rating upgrade to investment grade. She said that Tesla's constant improvements will help the car company to keep its margins higher, since cost savings are implemented regularly. Merz added that the carmaker's improving financial numbers posted every quarter are a reflection of this manufacturing capacity. Interestingly, Moody's Investor Research upgraded the Tesla's credit rating to Baa3, previously classifying the automaker as Ba1, which is the agency's top rating for high-yield corporate or junk debt. In a recent update, Moody's wrote that the ratings upgrade reflects its expectation that Tesla will remain one of the foremost manufacturers of battery electric vehicles, with an expanding global presence and very high profitability. Moody's expects Tesla to deliver around 1.8 million vehicles globally in 2023, which would be a 34% increase compared to 2022. It also cited the automaker's considerable investments in new vehicle and battery production as enabling a steep increase in global deliveries. Several experts like Gary Black and Alexandra Merz have a firm belief in Tesla. Many are of the opinion that the car maker can successfully keep up with the strong competition in the EV market. Tesla is also investing in artificial intelligence, and while this part of its business model is still in its infancy, significant growth is still expected. What do you think could be slowing down Tesla's stock price? Let us know in the comments section, and don't forget to tell us what your valuation on Tesla is. If you would like to know what Tesla has been up to these past few days, go ahead and click on the next video on your screen. See you there. See you.